Dr. J, how much of the volatility do you think that we've seen over the last many days has to do with what's taking place in the energy? I mean, natural gas is obviously going crazy over in Europe. It's been a big story here. We're watching oil prices as well, pushing $80 a barrel. That fuels pardon the pun, fuels the inflation debate. What are we to make of what's happening there?
Well, you're absolutely right, Scott. And I read just yesterday about India was down to a 4-day supply of coal as far as those power plants and so forth that they're reliant on. There is a global squeeze on energy right now. There's no doubt about that. And some soothing words, I guess, which we rarely get from Mr. Putin, actually helped reverse that 35–40% jump overnight in natural gas over in Europe. Putin saying basically, hey, I've got all the natural gas you guys want. He didn't say at what price, Scott, but nonetheless, they're paying more than 5 times for natural gas what we are here. So in other words, we're very lucky to be energy independent. Europe is not in that position. They will continue to have to rely on Mr. Putin and others for the energy that they need. And clearly that is impacting prices of a variety of things. And that inflation will be something that, this jobs report, we're all looking for it on Friday after today's good or even great ADP report. So to Brenda's point, yeah, we're waiting about the debt ceiling. We're also waiting on that jobs report. And then how is the Fed going to react to the inflation that is clear and present, and it's a danger, Scott.
It's one
clear
of the
and present danger. Yeah, I'm stealing that, but that's nonetheless what it is.
It's one of the reasons why people, Weiss, are growing more bullish about commodities. What I find interesting is that even in the current environment, you're selling FCX, Freeport McMoran. Right. You say it's not going to work despite the perceived good news for the commodity space, vis-a-vis what I'm talking about with Doc.
Right. So here's my view on commodities, which is when everybody loves them, when everybody's pushing them, that's when you've got to be cautious on them. So copper pricing, I watch the commodity charts, all the commodity charts pretty carefully. Copper pricing is actually held up, but it's atrophying a little bit. And despite the good news, you've had another recommendation on the stock today, an upgrade. The stock's not responding, and it has been responding. So copper's not a growth stock, not a growth story. Aluminum, even though it's holding up, is not a growth story. So commodities go up and down, and they're impossible to analyze because so much speculation comes in and drives the prices.
Is steel a growth story?
Slowing down.
Is steel a growth story?
Steel is not a growth story.
Why do you love Cleveland Cliffs then?
Are you in the right spot?
Well, why do you love Cleveland Cliffs?
Well, number one, I don't love Cleveland Cliffs.
You love Cleveland Cliffs.
It's not a big core position for me. I like Cleveland Cliffs. Cleveland Cliffs.
You might not love it as much as Farmer Jim loves it, but you love Cleveland Cliffs because you talk about it all the time. It's still a decent-sized position in your book, too. Calling you out, Weiss.
You can ask Farmer Jim about our offline conversations about Cleveland Cliffs. I don't love Cleveland Cliffs. I'm there. The reason why Cleveland Cliffs is somewhat different is that it's a fully integrated producer, and you've had a major decline, a $100 decline in the price of iron ore. Guess what their feedstock is? It's iron ore. So that's why I'm in Cleveland Cliffs. So that's a different story completely versus a pure play like Freeport in copper. Okay. Sure, they've got some other stuff, but basically it's a pure play. But let me just tell you one thing about the market, which I think everybody's missing here, which is that the market got to where it is by some growth in earnings, some actually pretty good growth, great comparisons from the pandemic, and multiple expansion. When rates go up, and we're in a tightening cycle, make no mistake about it, compression happens to multiple. So we're seeing the downside of multiple compression right now, and that's what's keeping the market low, and that's why I remain very cautious, because I don't think this is going to be a good quarter at all for earnings.